Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live at yorbamedia.com. All right, Nick Santiago, President and CEO in the Money Stocks, on the show with me today. Nick, what's going on?
Hey, Michael. Great to be back.
All right, me too. All right, what about J.P. Morgan?
Well, I figured since we talk about this stock every day, we may as well just start the segment off with it. It's still holding up very, very well at the moment. But one thing I am starting to see is that the stock is starting to really look tired up here. Now, I'm not saying it can't go higher. The next big level on the stock would be $59. But I am starting to see some fatigue here. And you could just see that the stock is just slowly just grinding higher. Now, it's had a tremendous move. I know we talked about it last week. The stock's gone from $29 to $56 over this past year. It's tremendous. But it is starting to show some signs of fatigue, and I think that's a little bit of a warning sign. I would not short the stock up here, but just use it as a market barometer, and it could be a sign of things to come.
Okay. Don't leave me there. I mean, keep going. With sign of things to come, what do you think is going to come?
Well, I think if the banking sector, because this sector's been the strongest stock, this J.P. Morgan, for the most part, is the real Bank of America. If this stock starts to slide and starts to sell off, we're going to have a real correction. We haven't had a single correction in the S&P 500 of more than 6% in over a year. So if this stock really starts to falter, then I think the overall stock market will come in as well. Now, if JPM takes out that $50 level with any real significant volume, I think the stock could go down to around 45. That's where I would be most likely inclined to buy the stock. So I wouldn't chase it up here at all. But if it gets down to 45 and any corrective move, I would be a buyer down there.
Yeah. Now, I know you also use timing models. Do you have any idea, if we do continue to fall lower, do you have any idea how long this trend could last on the pullback?
Yeah, I mean, if we started to fall right around within the next couple of weeks, I think we could fall for probably a couple of months. And then I think that would be an opportunity for or a chance to get back into the financial stocks.
So I'm getting a feeling of potential September low.
Possibly September, October, in that time frame, I would think.
Okay. All right. Just wanted to follow up with that. All right. XLF.
Yeah, the XLF, which is basically the same thing. It's just really an ETF that tracks all of the financials. I have some mathematical models that I use, and right now when I look at the XLF, we're nearing its upside maximum, and what I call this is the max move, and a little bit above 21 is really all the that this should go. I really can't see the XLF really exceeding 22, but somewhere around 21 and a quarter would be its maximum upside, which is less than 75 cents from here. So I don't really think the financials got a lot more left in the tank at this stage of the game. Okay,
well then, again, if it turns here and you've got some kind of an idea where you think it may fall to, give us some support levels, what you're thinking about.
Well, right now, if my math serves me correct, I would say any break below 19 and a quarter with volume, this can go down to around 17. Maybe even 16 and a half. That's where I would be a buyer of the XLF.
Okay. All right. ITB.
Yeah, the ITB, which is really a home builder ETF. I trade this one quite often. I track it. Right now it is looking very, very bearish. This has downside potential to around $20. We'll see how it reacts there. If it breaks that level, the $20 level, with any kind of volume, I think it can go lower. My next downside level would be, if I have this right, would be around 17 and a quarter. But right now, I'm just expecting the ITB to get down to around $20. I think that's where traders can play it for a quick bounce.
Okay, now this is home construction. So are you looking for a pullback on the index or a complete contraction of the home building industry that's going to be reflected with this price?
Well, I think that right now the home builder sector has been a leading indicator. If you ever look from the ITB really from October 2011, it went up it was just one of the strongest moves we've seen in years in this sector. So if you look at the home builder stocks, this ETF being a home builder construction ETF, it really reflects the home builder stocks. right now it's showing us that there's weakness out there in this sector, and this sector is probably making its first major correction in a while.
Okay, all right. So ultimately, higher prices, but you're just looking for a short-term pullback that could take us down to. Okay.
I'm not sure if it's going to make higher prices. I really don't expect higher prices at all this year in this ITB. I'm just looking for a bounce trade around 20 at the moment. Probably is going to be good for about 2 to 3 points. I can't see this ITB getting above 24 and a half right now at all.
Well, that's where I was kind of like going to lead to in regards to this, because what I'm trying to find out is, do you see fundamentally on this? So let's say we move lower, and you've been accurate, believe me, exceptionally accurate on this stuff. If we do move lower on this index, are you thinking that we may have some kind of a short-term top in the underlying business here, home construction?
Oh, yeah. I think we already have a short-term top from May. If you notice the S&P, the Dow, they exceeded their May highs, but look at the ITB. The ITB has not exceeded its May high, and that's a leading indicator for me, and that's ultimately what has me so cautious in this market while so many people are so bullish.
Well, so are you thinking that we may have a stall here or a pause in home pricing? Because it's been moving up recently.
Oh, it's been moving up dramatically. I mean, it's been almost something similar to what we've seen in 2004, 2005. The moves up in housing prices have been dramatic. But, yeah, this is telling us, this is a precursor. If you remember,
okay.
If you go back into 2005, Michael, the home builders topped out in August of 2005, yet home prices didn't stall out for another 6 to 9 months later.
Okay, got it. Leading indicator. Thank you. All right, U.S. dollar.
Yeah, U.S. dollar, last week we talked about this, and it's doing exactly what we talked about. I think last time I was on your program, I said, this will probably backtest 83.50, and then it'll start to fall again. I still think this is headed to 81. 81 is where we're going to see how this stages a reaction. There you could get a bounce. But overall, I think the U.S. dollar index should head lower, and that should be beneficial to gold. Things like the GLD should head up to the 132.50 level.
Okay, all right. We've got plenty of time left in the segment here today, so we don't have to rush on anything. Let me move over to the euro. Do you trade it or watch it at all? What do you think is going to happen there?
Yeah, I trade the euro quite often, so I track it. Right now, when you look at euro dollar, I think it's headed higher. It's probably headed back up to 133.80, 134 level. That's where it should stall out.
Okay. Now, you also wanted to bring up the U.S. yen, right?
I wanted to bring up dollar yen today because a lot of people don't realize, but this also moves the markets, and I mean the stock market. So right now, I think dollar yen is headed lower. This could be headed back down to 95, maybe 95.17. That's a mathematical number that I have as of today on the daily chart. But ultimately, when the dollar strengthens against the yen, it's beneficial for the S&P 500. When the dollar weakens against the yen, which it is doing today, it's a negative for the S&P 500. So ultimately, I'm negative on the S&P 500 via the dollar yen chart.
Okay, all right. Since you bring that up, let's go back to the S&P and talk to me about what you think is going to happen next. Prices, timing, things like that.
Yeah, well, I mean, I'm short the S&P 500 already, so I've been a little bit wrong on this. It actually has gone higher than I expected, but right now I am in the camp that this can pull back probably into the 161 level. That's going to be its big reaction point. If we take out that 160, I should say, using the S&P cash, I'm sorry, if we take out 1610 with any real conviction, then the S&P is really going to be in corrective mode, and you could see a test of 1,500.
Okay, all right. My timing models back on last Friday gave me a number that said it's either going to run lower for 4 days or 44 days. We passed the 4-day mark, which gives us September 1 for some kind of a target low, but the numbers that I was looking at was at least 1,600 for this pullback. It seems like we're pretty close on what we're talking about when it comes to price, but what about the timing model on this? Do you think that we're going to get enough time for everybody to take a breather, take profits, and then readjust later?
Well, I think this is the time to take profits right now. So if you're holding longs, I would be locking in gains already. We're in earnings season. We've seen a lot of disappointing numbers come out. It really doesn't matter who it is. I mean, so many leading stocks from Microsoft to Sherwin-Williams. I mean, all different sectors and everything. The earnings have been disappointing. So I think this, while the market is very dull right now, what I mean by dull, it's such a light volume tape. It always can float higher, but I mean, I would be really, really cautious at these extreme levels.
Okay, how about interest rates? You think they're going to have a big part to play in this movement?
Absolutely, absolutely. Even today, with just a slight tick up in interest rates, the 10-year U.S. Treasury note now the yields are at 2.6%, 2.61. Ultimately, I have yields penciled in to go to 2.9 to possibly 3%. I think that's really why you're seeing such weakness in the housing, the home builder sector right now, and you'll also see it in the mortgage REITs, and you'll also see it in utilities. So I think that yields are headed higher, bonds are headed lower, and that's a negative as well.
Okay, can you give me some quick numbers on the TNX? We got about a minute left.
Yeah, if you're looking at the TNX, which is 10-year bond yield, right now it's at 2.61, should be headed to 2.9% and possibly even 3%, and that's really gonna hurt anything housing related, anything home builder, anything construction, and you could already see that prices are starting to go up, but the reality of it is housing prices could get hurt as well.
Okay, got it. All right, any trades that you're proud of today in the trading room?
Oh, Michael, we've had about a dozen trades. You just got to come into the trading room every morning and just see them for yourself. I mean, we pull them off each and every day. We're right in the middle of earnings season. We're getting tons of earnings. Tonight, I'll actually be hosting a morning gap webinar. Each and every morning, I post all of my morning gaps before the market even opens. And I think the last loss that we took on a gap play was about 2 months ago on IBM for about 50 cents. So I think traders, if you want to turn into a 60-minute trader, trade the first hour of the day. You could be off playing golf afterwards. This is where you want to come to. Traders come over to the website, or they could call the office tonight and sign up for a webinar. I'm going to give that out, the webinar at 6 p.m. this evening, East Coast time. It'll last probably 3 to 4 hours, and tomorrow morning you'll be making money in the morning gaps.
Perfect. Thanks, Nick.
Thank you, Michael. Have a great day.
You too. All right, everybody. Nick Santiago, President and CEO, InTheMoneyStocks.com. On the other side of this break, we're going to come back with Peter Schiff.